Hello and welcome. You are here with us on Bloomberg Quint, where Shraddha, Somit and I are wrapping up the markets for you. Now, this morning, there were two factors which we were keeping an eye on. Firstly, of course, was the reaction to the long-awaited RBI governor's appointment. And now that the news is out, we really haven't had so much of a reaction, at least in the equity markets. The other factor we were keeping an eye on was the consolidation, the solid consolidation that we saw on the Nifty last week. And, that has continued going in today as well. So we really haven't seen much when it comes to the Nifty or the other indices either, with the Nifty also declining marginally. But for more about the reactions when it comes to the money markets, Shraddha, tell me what's happening when it comes to the rupee and the bond.
So Agam, there's a market belief that Urjit Patel, the new RBI governor, is said to be hawkish on inflation. So he shares views which are similar to Dr. Raghuram Rajan. And while the markets were expecting somebody who was more neutral or dovish to come in, we actually had Urjit Patel come in. So that actually led to dashing hopes of an imminent or immediate rate cut, repo rate cut. And that's probably a reason we saw a little bit of disappointment coming in, not a very big reaction as far as equity markets are concerned, but some small reaction. Even as far as the debt markets are concerned, the 10-year government bond yield rose about 5 basis points to 7.154% now. So that was trading close to the 7-year low. So that corrected a bit and rose a little bit of pullback that we saw there. Rupee saw a marginal change, depreciated just by about 0.25%. So not too much of a change. They're pretty stable as far as that is concerned. So overall, Urjit Patel's appointment is said to be or is seen as a signal of continuity because he's not an outsider. He's a part of he was RBI deputy governor. So overall, it's said to be positive because all the people that we spoke to today, for example, Ashish Parthasarathi, the head of Treasury at HDFC Bank, he said that he expects the rupee to remain stable while bond yields could see some pullback, and that's exactly what we saw, a small pullback coming in as far as bond yields are concerned. Similar view was what we got from Anant Narayanan of Standard Chartered, who you spoke to. We also had Andrew Holland, who said that it's the positive thing is about the continuity of the monetary policy. So that's what the market echoed overall. But the interesting fact that Andrew really said is that while everybody was talking about a 25 basis points repo rate cut in 2016, and nobody's gone ahead and said 50 or 75. So 25 is what people have been working with. But Andrew actually said that we could put inflation is under control. So that's his kind of scope that he sees as far as the interest rates are concerned. So he also shared the similar view that there could be some little bit of run up as far as bond yields are concerned. But longer term trend remains intact, and we are going to fall further close to that 7% mark. Rupee again expected to remain stable. So those were the key takeaways. This is what the market was expecting. That's exactly what happened, and that's what we saw. Anything? Yeah.
No, actually, I have a question on the rupee, and you've done a roundup of a lot of these experts who had a view on the rupee. Can you tell me what they think of the rupee? Do they actually expect the rupee to move between 68 and 70 for the rest of the year?
Most of the people that I've spoken to are expecting the rupee to trade close to that 67, 68, 68 and a half kind of a mark. 68.8 is the level that we had seen previously also. That was the biggest fall that the rupee has seen. But overall, what will really guide the rupee is what they're saying is the FCNR deposit redemption that is coming up in the period which begins September to October is the time that we could see some depreciation in the rupee. That's what they're saying. So 68 kind of levels is something that should not really surprise the markets, but overall not a big fall or a big change that they expect, given the fact that RBI has been intervening and has time and again assured the markets of dollar liquidity as and when required.
Well, coming back to the indices again, it has been very dull, a lot of lethargy. I can't really say complacence, but we have seen the Nifty once again hang around between that 100-point range, that is between 8,600 and 8,700. When it comes to options, and we have seen some amount of activity once again, do remember that we are in expiry week, so it is very odd for the Nifty not to move substantially, especially on the Monday and Tuesday of that expiry. But when you consider some of the movements there, once again, when it comes to distribution, while we have established a firm open interest maximum distribution in the 8800 call, we keep seeing a difference in the 8500 and the 8600. But though now, as of today, we are looking at 8500 taking it, and that's also firmed up as a range. So you have 8500 on the lower end and 8800 on the higher end. Even if you consider what's happening today itself in terms of the change in open interest, while you have seen a lot of unwinding of puts in the 8600 level, the strikes of the 8700 calls have seen an increase, which also indicates a little bit of writing. So as far as 8600 is concerned, that is the next immediate level that we will be keeping an eye on. That said, there are plenty of other counters that have been moving the indices. And well, Shraddha, if you can tell me what's really, I know we've had a very varied trend when it comes to the movers on the Nifty today.
That's correct, Agam. So if we look at the Nifty movers, the gainers and the losers, sectors which really stood out today, FMCG, defensives, those were actually supporting the markets, even as all other sectors except for FMCG actually ended in the red. So you had profit booking coming in the metal stocks. It was Nifty Metal Index was pretty strong last week, so some profit booking there. Banking stocks were weak. So FMCG was really the sector which was supporting the Nifty. So if you look at all these stocks, you have HUL, you have ITC, names like those, heavyweights like those which are supporting the market. Amongst the other gainers, you had Z Entertainment, BHEL, Idea Cellular saw some rebound after a week last week, so some bounce back seeing there. On the losing side, we had cement counters like Grasim, Ambuja Cement, Ultratech Cement. All of these were seen weak in trade. You saw TCS, which was dragging the markets lower. So IT continues to remain weak. In fact, Infosys made a 52-week low today. You had NTPC that was reacting negatively to its earnings. You had the pharma sector, so you have names like Sun Pharma, Aurobindo, you have Lupin. All of these were also weak in trade, losing as much as 1.5 or to 3%. So all those names were really weak in trade. That's as far as the Nifty is concerned, but we also have Somit joining us. Some interesting trend as far as the entire Fortis group is concerned. Somit, what is going on there?
Yeah, yes, today we saw some contrary reactions in Fortis Group stocks. As you can see here, Fortis Malhar gained 20% as it touched its upper circuit, thereby gaining 28% in 2 trading sessions, while Fortis Healthcare corrected 3.5% after it transferred its SRL Limited to Fortis Malhar. By the way, SRL Limited contributed around 14.5% of its consolidated revenue. Are there any mid-cap stocks that you are looking for?
Yeah, of course. Other than Fortis, as you can see, we've seen an upper circuit loss when it comes to Fortis Malhar. Other than that, we've also seen a lot of varied moves. And first of all, I want to come down to the 52-week gainers. That is the 52-week highs, the stocks that have made 52-week highs. And we have 36 out of the 500 NSE Nifty 500 counters, which have done well in today's day of trade. Some of them will include HSIL, Dhanuka Agritech, yeah, IGL Gas, of course, looking at good grains, and Deepak Fertilizers is a counter which has hit about a 20% circuit today, eventually closing somewhere around there, but still gained around nearly 20%, which also brings me to the gainers. So as you can see, Deepak Fertilizers now at 19% gains, J Kumar Infra, Oberoi Realty, Dynamic Tech, Dishman Pharma, all of them gaining well over 5%. On the losing end, however, as you can see, we also have losses in Welspun India, which has lost as much as 20%. This stock is in the news, has been in the news recently. We also have Zealand, Welspun Corporation, Bharat Financial Inclusion, of course, looking at some amount of profit booking, and it's the same for Sun TV Network and Ramco Systems too. Now, on the whole, it's been a relatively non-performing day for the mid caps, except when you consider some individual moves which have outshined. Of course, we do have RBL, the IPO which is open, and Shraddha, what can you tell us about the subscription there? It's been strong.
Yes, Agam, just like it was expected, because you had most of the broking firms given a subscribe rating. Yes, the IPO was completely subscribed, fully subscribed at 3 p.m. That's the second day today. So 1.81% was the overall subscription. We still have one more day to go tomorrow, and usually retail investor or participation picks up on the third day. That's what we've normally noticed. So fully subscribed as far as the second day afternoon is concerned. You were mentioning about stocks like Deepak Fertilizers, GSFC. So yes, Agam, I believe it's the monsoon proxy stocks. So you have all your agrochemicals and your fertilizers which were doing well today, because some of the other names that I came across is RCF, GSFC, Gen Irrigation, Dhanuka Agritech, BASF India. All of these saw gains of about 3% and so. Monsoon proxy stocks is something which is really doing well today. And of course, we also have Tata Power and Aurobindo earnings tomorrow. That's as far as Nifty earnings are tomorrow. So that's what we're going to keep an eye out for. Aurobindo corrected about 2.5% today. Pharma was weak. That was another reason, and ahead of earnings. But that's for today's edition of Market Trap. Continue to join us at 3:45 p.m. on Monday to Friday on Bloomberg Quid Facebook Live.